All right,
Maybe.
we're live.
All right, we're live. Look at us.
Alive, live.
All
Yes.
right. Happy Wednesday, March, what, 27th?
27th already. Wrapping up first quarter already. That's insane.
Yeah, it goes by awfully fast. And yeah, we're already going into the second quarter of the year.
Yeah.
And
So
still no refunds. Um, well, glad you could join us here with Elizabeth today. Elizabeth and I are doing this on our own. Still don't know why El Jefe, our boss, allows us to do this, but that's his risk, I guess.
he's taking all the risk. No, we always joke like that with Mike, and we really do make an amazing team, as we always like to brag about our team because we really do. And Mike had an open house to be at today, and so he had a prior commitment. And of course, Tom and I are on our best behavior here. Um, I think. Wow. Just getting this going. But there's so many changes going on right now. One of the first things that we're going to talk about is the Hometown Heroes releasing $100 million again. So from what I understand right now, there is a pause. And even though like I know that I've been making some videos on Let Us Know because they were releasing every other week funds for us to pretty much try to tackle loose sleepover and practice our typing skills as quickly as possible every other week. And I guess now what they've said is that that's going to stop for a while. So we've come to a pause with Hometown Heroes, and now they are going to be releasing it, and we're going to be back July 1st. So the one thing that I want to just say is that we do have other options for down payment assistance. This is not the only option that we have. It was the most popular, the one that's probably given the I guess the most. But it will be back, and it is going to be funded again with $100 million from what we've heard.
And that will take place July 1st. So, as Elizabeth said, we'll need, if you want to take advantage of that Heroes program, and we do have other programs that I think offer $10,000 bond money for
Mhm.
first time buyers. There's a little bit tighter restrictions on those. That's why we like the Heroes kind of. It gives us a little bit more flexibility with the borrower's overall income. But that's coming available July 1. Again, we're going to need a contract. So it's not like July 1, we could just start putting money aside, or it's not like a regular loan that we do where we could just lock a rate whenever we want to, or when we have a contract. This, we need an actual contract. We need to have log into a system and reserve your money. So if you want to take advantage of the Heroes that's coming out July 1, just be sure you get yours. You got 2 or 3 months, or well, you got 3 months to find a house and go to contract on it.
Yeah, I think this is actually a nice heads up that you're getting July 1st. And like I said, we're already done with first quarter. It goes extremely fast. And so by the time you know it, you have April coming up. It gives you, it's a 30-day turnaround for we could do a whole lot quicker, but the average is 30 days for a contract from beginning to end. So this way you're not rushing into finding a home, but at least it's almost like you have yourself in line almost because these funds, like if I and correct me if I'm wrong, Tom, last year when $100 million were released to the first time home buyers, and then we took away, not we, because I wasn't part of that, but they said, oh, I had no
You
say.
did that. You did that. You did.
I did that. Florida
You
Housing said that we didn't have to, go by um the occupation. So all of a sudden it opened up to everybody, and we all had bets going. I for sure lost because I think, like I had said, that it was going to run through like January. I think Mike said December. I think you were the closest one. I think you said November or something, and it was gone in August.
mhm.
So it was like 2 months, 2.5 months by the time that it was gone. So I wouldn't stick to, oh, they're releasing another $100 million in July. That gives me plenty of time because I think now that we all know how the process works and more people know about the program, I wouldn't be surprised if it's less than 2 months by the time this goes.
You're right. It won't take long. The program is one of the better ones that they've come up with. The restrictions on income are a lot more flexible. The 5% of the loan amount is a pretty good chunk to help you out with. So, like we always try to say, please, reach out to us. Your first step, and I know we all seen and we're going to get into the social media and what's going on with the agreement with the buyers, realtors. We're going to get into that, but the one thing we really want to discuss is please reach out to us first. We're going to have to, be your starting point. You got to know your numbers.
Yeah.
So before you start looking on weekends, before you start taking your time and a realtor's time and everything you're going to put into it, you want to know where you want, where you stand financially. So what you can make an offer on and what you can't.
Yeah. So, and that's actually going into effect as of right now, July 1st too. So lots of things going on July 1st.
And if there are things that we need to fix, whether it be credit, whether we need to do some repair on some stuff, whether we need to save some money, whether we need to work on where we're going to get maybe some gift funds, this allows us some time to communicate that with you. So when the money does come out July 1st, or if you're going to use something before July 1st, we're ready to go ahead and you can go ahead and make your offer.
Yeah. Yeah. This has been a huge help for a lot of families. HomeTown Heroes has. I know that I even right now, I have people that were waiting on HomeTown Heroes funds that we couldn't help them just because, again, funds ran out and they stopped it for now. But we couldn't help them with others just because of the restrictions, like Tom was saying. So there are restrictions as far as credit, like it's pretty much flat, 640 across the board. But what makes it different, what makes HomeTown Heroes unique, is that the income that you could have, and again, it's per county. It's not everybody gets the same thing. And we lend all over Florida. So we always got to be checking to see how much we could actually go up to for each individual county. Which brings up the point that I know we've said in the past. We have a lot of people in Palm Beach County looking in Port St. Lucie area. Totally different county. So totally different rules apply. But HomeTown Heroes does allow us to go a little bit higher as far as income goes. And that's one of the reasons that we want to make sure that that we're looking into this, that we're looking into it ahead of time, so you know what your restrictions are if you even qualify, because it's not a menu item. You can't just say, I want HomeTown Heroes. We have to make sure that you qualify for it. So that'll give you plenty of time to kind of figure out, which direction to go and where you stand as far as money goes.
That's why we ask of you to know your numbers, or help us to get you to know your numbers on the mortgage side. Okay, we deal with a lot of customers financially; they can afford the house, everything as well. No problem there. But how does it look on paper? And that's what we have to go on. That's why we want you to reach out to us, because we want to be sure all the ducks in a row, all the papers in place, to income, assets, whatever it is that's needed to get you approved. Again, the object of this whole process is to close on the home.
Right.
And that being said, we're going to touch real quick on the National Realtors Association. If anybody heard of what's going on with buyers and realtors.
Right. So for the first time ever, everybody stopped talking about interest rates, and this is what the topic is. So like we're kind of off the hook for like a little bit, because there's always like something that comes up that everybody's talking about, and this happens to be it this week, because obviously I think it's a big change. We sat at Keller Williams. They had an amazing meeting. So kudos to them, because I think that they're being well informed, and there's a lot of information that you either get information or you get misinformation out there, right? And I do think that was such a great meeting that they had. I think it was Monday. We were there on how things are going to work, and I don't know. I kind of feel like that was a big. It's almost like they have that lead. They have that support from their team. I know that I learned a lot on how realtors are going to be looking, now with this change that we're going to talk about. And it's always important, I think, for us to know what's going on in the realtors world, because it affects us. At the end of the day, it affects us the same. So we're all in this together. We will figure it out. And I think, again, just the more you are aware of what's going on, and how this is going to work, especially for our buyers, then you'll just be ready to go come July 1st.
Yeah, Elizabeth and I have been doing this for many years, and look, we know the importance of having a representative, a realtor, as a buyer. There's, everything is always wonderful until it isn't, and then you got to need somebody responsible to go ahead and kind of fill in for you. And we're both huge advocates of buyers, realtors. They certainly serve their purpose. But with this change being made, And as lenders that we are, this change now is going to have a buyer come to a separate agreement with that realtor if they're going to use one to see what the realtor is going to be charging them for their services. And that's what we need to know also. Again, as a lender, we need to know what amount of money did you agree to pay your broker so we can be sure you've got enough funds to pay at closing. That broker that you hired is going to want to get paid at the time of closing. So now that cost almost becomes or is now part of your closing costs. It's nothing that you could finance. It's something that needs to be paid at the time of closing.
Okay.
No, so we would need to know in the beginning when we ask what agreement did you make with your broker or with your realtor as far as their commission goes. That's why we're asking. We have to include it in your numbers.
Right. And I think like one of the biggest things that I guess that I see, and I guess, and I don't want to say things wrong because this is so new. So I'm still learning, whatever is the changes are. I know there's like a lot of questions out there too that have been brought up that have not been ironed out. I don't even know if they're going to be ready July 1st because there are a lot of questions that I don't know. We're going to have to come back. So-and-so's going to, and it's a lot of I don't knows out there right now, but we can give you whatever we do know. And one of the things that I know that I would working, and I could say we, because I know Mike feels the same way. The value that a buyer's agent brings is, I mean, I can't do that job. I'm just being honest. Like it's a very tough job. They do have to get paid. I mean, the way that they represent you, you wouldn't go to court not represented. You know what I mean? That's the best way that I could describe it. If you have somebody that's after you, you're not going to go to court not being represented, not knowing what certain laws are or whatever. Like you want somebody to protect you, that they're not going to work for free. So the commission part of it, like I'm not even going to get into that just because obviously that's something that's going to be negotiated as it is now. We don't have a say on what the negotiation is, but I will say that the value that a buyer's agent brings to the table is huge. And even for us, because it's, and I say this, and I'll be honest, like sometimes I think when people walk into an open house, that listing agent is working for the seller, right? So you walk into the house, and in my opinion, the listing agent is always going to want to get top dollar for the seller. Your buyer's agent is always going to be on your side as the buyer trying to negotiate whatever it is needs to be negotiated. So when you think about it in those terms, you want to have good representation on your side. You want to have somebody that is knowledgeable, somebody that knows what they're doing, and they want to get compensated for it. Nobody wants to work for free.
Yeah. So whatever the agreement is, or whatever it is that you're going to work out with your realtor, if the law, if it does come to pass, I think July 1st and it goes into effect, they might kick the can down the road and delay it, or like Elizabeth said, maybe make some changes to it. But until then, everything is still status quo. But we'll see how it plays out come the beginning of July.
Yeah. And then obviously, like at the end of the day, you're still going to have to go through us, like whether it's a listing agent, buyer's agent, whatever it is, you still have to get pre-approved. So just, I would say it's so funny because I think for like the longest time, I've always tried to say, you still need to come to a lender, no matter what you're doing, you got to come to a lender. But when you think about buying a house, you automatically think I'm going to a realtor. Obviously that's what they do. But they could bring you back to us. So at the end of the day, just make sure that you get your pre-approval in, that you go ahead and we could share links. I mean, our application is very, very simple. But you still have to get pre-approved to know what it is that you're shopping for. I don't know, maybe we could find a link, Tom, that we could add to this live stream. We could probably post it in the comments to kind of give you a better idea of questions and answers that have been given so far regarding this. But yeah, that's pretty much in a nutshell what we're looking at.
Yeah. Well, yeah, again, your starting point is going to be knowing your numbers.
Yeah.
What the income is, what you can afford to pay, what the association fees are available out there, whatever it is. Every house is different. Every borrower is different. Every borrower's income, assets, things like that are different. And if you're self-employed, as we've discussed before in the past, that's a whole other thing we need to kind of work on. So yeah, your whatever might be going on the real estate side with the buyer's agents and such, your first phone call should be, of course, to us to get your financing done. Knowing your numbers is going to be the first thing.
Right, and that's something that it still goes on right now.
Yeah.
You're not going to see a realtor, and a realtor's not going to take you house shopping if they don't even know what to look for, or they don't even know, what your pre-approval is. They're not going to do that now, and it's not going to happen ever, because again, that's your first stop is going to be, like Tom said, knowing your numbers, knowing what you could afford, um, and sticking to that. So, I mean, we're always going to be here to help. If there's any questions that come up, if we don't know the answer, we'll let you know. But I know there's going to be a lot of questions that are going to pop up with NAR. I know there was tons of questions on Monday when we were in that room. Like I said, I learned a lot because I didn't know exactly what was going on, like in a nutshell. But they really dove into it, and that was actually good information that that we were able to hear that day.
Yeah, that Keller Williams office in Wellington is very informative.
Yeah.
They do a lot of training. It's a great office.
Yeah, it really is.
So that's where we are with knowing your numbers, with what's going on with the realtor talk with borrowers and sellers. But for right now, status quo. If you're looking for a property, grab yourself a nice, get yourself a realtor, or get yourself pre-approved first. Do that first to get your numbers down.
Yeah, I know one of the things that also we wanted to bring up to you was, as we said we were going into the second quarter. Tom and I were talking earlier, and we were talking about the blended rates. And we figured that's something that we were going to touch on today, even though it's not on our title. But we figured that we'd bring that to you too, as rates start kind of coming down. And I know the Feds met recently. There was no change once again. But of course, rumor has it, not set in stone, because if we did have a crystal ball, I know Tom and I would be just partying it in Vegas, but we're not. We're here. And, so we don't really know like when things are going to change or whatever. But rumor has it, we'll just leave it at that rates are going to be dropping as the year, continues. And one of the things that Tom brought up to me today, which I was like, you know what, Tom, he enlightened me. I was like, wow, Thomas, like he was really talking about just the way that with the high interest rates on credit cards, high interest rates on loans and everything else, when you come to see what your liabilities are and you get that blended rate, it kind of opens your eyes to really what you're paying overall. And sometimes, even though the interest rate may be a little bit higher right now, it still makes sense for refinances. I know we've helped a few people that have actually gotten out of debt in their 20s, 30% interest rate on credit cards. And yes, probably, paying 6%, 7% on their refi right now, but it's still cheaper than the credit cards that they had right now.
And not just that, you're also eliminating that payment that you're making every month of those credit cards. So granted, you might be paying a little bit higher in the interest rate on your mortgage, and we're not looking for you to drain the equity out of your house. This isn't 2008. This is just to where you're able to look. I've been living off credit cards. I got no secrets. I've been living off those for the past 24 months or so. And I actually started doing this to see where Michelle and I stand. Where are we with the credit card debts and our mortgages, plural, and so on and so on. So, I thought, well, it's yes. Would it be a little bit tougher mentally to pay a couple of points higher in an interest rate if I decided to take some equity out of the property? Sure. Would love to get rid of the X amount of dollars per month we pay on nonsense credit cards and the interest rates? Of course I would. Especially at this point. So, it's one of those things. If you were going to lay out your credit cards or call us, we have a formula where we can lay it out for you, all your credit cards, what the balances are, what the rate is on them, maybe your mortgage, maybe you have a second home equity line of credit you want to pay down and get rid of. You put all those together, you calculate how much the interest rate is going to be total. And if it's somewhere around the 5, 6s, 6 and 7s, and you can get cash out to get rid of all that financial obligation that you pay every month, it's certainly something to consider. The cash out refinances, granted, I understand rates right now aren't rosy, but they sure aren't any prettier on those credit cards. And so, you're making minimum payments, and that 10 or 15,000, whatever it is that you owe on it, is not going away.
Yeah. They when you look at the interest rates, I know that that's something. There's people that I think are a lot more sensitive to interest rates than others. But when you do the math, it's significant. The amount that you pay in interest, I mean, it hurts. I mean, you start looking at those very high interest rates, and even though your monthly payment says $100, like 99 goes towards the interest and a buck goes towards the principal.
Exactly.
And you're barely touching it. So, when you say, oh, it's just a monthly payment, Yeah, but the money that you're giving away over interest is absolutely insane when you do the math on it. So if you want to see that as side by side, we'll give you a good scare on how much money you end up paying in interest. I know that we have calculators that do a side by side comparison on how much interest you'd be saving from one type of loan to what you have right now. Um, and it's just mind blowing how much money we just go through. And we again, we stick to, oh, the interest rate is too high, but we forget about all those crazy interest rates that we're paying on, $10,000, $15,000 balances on credit cards, 30%. Like that's insane.
And that's the thing that's always kind of there was something. It's like try not to don't let logic get in the way of your decision making. But if you're paying 22 or 24%, we'll call it on the credit card, which you are making no equity out of, or you're not getting anything out of it other than that debt. Why wouldn't you pay 7 or 8% on a house that you're going to gain equity in over the course of time? First of all, we all need a place to live in. So we all need a place to sleep. There was a time in my life where whatever, I had a few houses, and one day I had them and one day I didn't. And I'm thinking, darn, I'm going to need a place to sleep. And so we all need a place to live. And again, if you're paying 22, 24% on credit cards that aren't going away for another 8 to 10 years, then why wouldn't you pay 7 or 8% on a mortgage? That's going to get you equity and some financial freedom in the years to come.
Yeah.
So if you've got equity in your property, please call us and let us do that they call blended rate. Just imagine putting it, and they come, put your credit cards, put all your debts into a blender, turn it on, it all blends up, and then that's how we're going to figure out what your rate is. And it might be better off taking some equity out of that property and paying off all those credit cards, and then putting those in a shredder and getting rid of them. So,
yeah. And even sometimes, like I know that the lines of credits, I get asked about lines of credits a lot also. That's an option. I will tell you that lines of credits are variable, and they're not as low as they used to be. So once upon a time when I was at the bank, like, we had very low rates for lines of credits, and now they're creeping up there. I mean, I just had somebody that closed on one at 14%, and I'm sitting and they're going, oh, but I have a 4 or 5% interest rate. I'm like, oh my gosh, if you would have just called me, we would have done, whatever you had going on, you would have, bought down the maybe bought down the interest rate. I said that, that would have worked, but unfortunately, I think there's a lot of times that we just don't see that.
I have my and home equity line of credits are adjustable. So mine, I think, started a few years ago at 6,180 new roof. It's at 9.75 now, and climbing. So home equity lines are great. I'm a fan of them. I have one my own house, needed a roof, but again, they're adjustable rates. They're due in 10 years typically, or they're amortized over 10, and whatever. If I can consolidate that thing and get rid of it, believe me, I will. So anybody else that's out there that's either got a second loan or credit cards they want to pay off or get rid of, and you've got equity in your property, think about taking some of that equity to get rid of some of that debt so you could sleep a little bit easier at night.
Yeah. Even vehicles. Oh my goodness. Have you seen the interest rate on vehicles? I was shocked. I just couldn't even believe it. I don't know when the last time I saw somebody have like a $300 or $400 vehicle payment on their credit. Like they're all like $600, $700, $800. I just imagine everybody driving around at this point like in BMWs and fancy vehicles, and they're not, But that's just what the truth is. It's just that the interest rates on these vehicles have just went up so high that again, if you are able to even pay that off with with a lower interest rate, why not?
Yeah, especially if you're going to keep the car, or if you're getting close to an end of a lease, and I know the lease vehicles, and I've been in that cycle before where you lease, you wait 4 years, you lease again, and you're always getting a new car. Luckily I just got through convincing my son, stop that cycle. Buy out your vehicle. The car runs fine. Keep it, run it, own it, get rid of a car payment. So we, like Elizabeth says, we see credit reports all day, every day. Car payments aren't $200 or $300 anymore. They're $800-$900, and you're right. Cars. I think it was COVID. Remember when COVID was? I guess the car industry was crazy.
Yeah, I mean, I had equity in my car. Like that. That was mind blowing. Like, and I don't drive anything fancy, but man, I was like, dang, I felt good. That car is worth it now. But it's just because of inflation and everything else that was going on. So the values went up, but so did interest rates, People like these car dealerships had like 10 vehicles on their lot. Like that was your choice, you know?
Yep. And you take it or leave it, and you take the rate and whatever. And that's everything has gotten to be very expensive, and it's gotten to be expensive just for us as it has for our hundreds of listeners out there. So we're just saying, if you've got equity in that property, or if you want to get rid of some of that credit card debt, there are ways to get rid of some of that credit card debt and use that equity to help you sleep at night. So.
Yep.
Otherwise, keep looking for properties. Hometown Heroes is coming out with money. We've got other bond loans we could kind of turn you on to and discuss with you. We've got plenty of loan options out there. And if you're out looking, of course, there's properties are coming up. I mean, I am getting, notices on my phone of more and more listings. So
same. And of course, like we said, there's going to be more information coming out on this whole NAR change, and we may not have all the answers right now, but it'll be, they'll come out little by little. Just make sure you're working with a lender
yes,
that knows what's going on, and realtors that know what's going on. You want to make sure that you're represented correctly on both sides now, and that everybody's being transparent. This whole thing was about transparency. Not that it wasn't there before, but that's kind of what they're sticking to. So I'll say the same thing, but it's all like pretty much coming from that. So I don't know. In the meantime, just keep us in mind for anything that we could help you with. Like we were saying, whether it's for a refi, any type of guidance that we can give you, we're here. And of course, just join our live stream every single Wednesday. We're here at 12. Send us questions. If there's a topic that you want us to talk about, we can. But other than that, we're good.
That's it. Share our information, please. It's anybody that that's looking to either purchase or refinance or anything to do with real estate, please refer them our way. We would certainly appreciate the referral in the business. We work basically, you don't see many mortgage firm ads on TV, and you certainly don't see a lot of them on billboards, and you don't see them on bus stops. We do 99.9% of our business is through referrals and through previous customers. So we appreciate it very much. If you refer anybody to us, we'd be happy to work with them. Please share our information. Thanks again for joining us on Wednesday. That was a quick 30. And we will see you next week.
All right. See you, everybody.